trading bell, we are at the headquarters of CIC Group. We're going to be talking to the Group CEO of CIC Group, and that is Tom Gitogo. Of course, we're going to get right into the numbers and figures coming out of the company, as well as some of his thoughts on insurance penetration within Kenya and where he sees us going. But first, take a look at his profile. Mr. Tom Gitogo, aged 50, is a Group Chief Executive Officer of CIC Insurance Group. Tom has an MBA in Strategic Management and holds a BSc in Civil Engineering from the University of Nairobi. He is a fellow member of the Institute of Chartered Accountants in England and Wales and a member of the Institute of Certified Public Secretaries of Kenya. Tom is also a fellow member of ISPAC and a fellow member of the Kenya Institute of Management. He is the Deputy Chairman of the Association of Kenya Insurers and the Chairman of its Life Insurance Council. Tom also sits on the Life Insurance Committee of the African Insurance Organization. Tom is also a member of the Institute of Directors of Kenya. He is a board member of ICMIF, International Cooperative and Mutual Insurance Federation. Thank you so much for joining us.
Thank you.
Let's get first into it with the numbers, because you did post an increase of about 30.7% in terms of revenue last year, and your profit after tax was about 625 million. So how did you manage to make sure that the trajectory of that growth is maintained even after last year's tough economic times?
Yes, you're right. Last year was a tough year, and we posted some positive growth in our bottom line. If you noticed, our top line did not grow as much, reflecting the toughness of the year. However, quite a bit of our profitability came from efficiency. We have become quite thorough in scrutinizing our claims to make sure we reduce fraudulent claims. But we have also become quite efficient through modernizing our systems, and therefore our management expenses are quite low compared to some of our peers in the industry. The investment income environment was not good, so our profitability largely came from efficiency. We did grow faster than the industry, which on an average basis did not grow much compared to previous years. But within the growth where we were operating, we were able to squeeze profitability from efficiency. This is something we have become good at. Our projection into the future is we will grow into our niche markets. We have a unique position where we specialize in ensuring the cooperative movement, but we are also able, and have done it quite successfully, able to provide insurance services to the corporate world, the economy outside cooperatives. So we operate in cooperatives where we are by far and away the preferred insurer, but we are also competing with our peers in the corporate world. This is a dynamism that we want to continue on, even as we become more efficient.
Okay.
Yeah.
And something you mentioned specifically was how you're clamping down the fraudulent claims. How are you doing that? Because it has been such a big issue in the industry for quite some time. So what are some of the ways that you have found that work well?
Yeah. The most fraudulent lines, as you probably can guess, is motor as well as medical. So for medical, one of the things we did a couple of years back is we invested in a modern system, a system that can give us an indicator of how much a procedure should cost. You shouldn't go into hospital with a headache and leave with a plaster on your right leg, which sounds funny, but
actually has happened.
Exactly. Or you are a gentleman, but on your medical bill you can find feminine charges that doesn't make sense. So we've become, our system enables us to scrutinize the charges that we get from hospitals, all the prescriptions that doctors give to our customers, as well as ensure that double billings and so on does not happen. So that's one. The second one is we have partnered with hospitals where upon prompt payment of their bills, we can enjoy discounts. We've also become quite efficient within the company in ensuring that whenever our patients are in hospital, we are visiting them and ensuring that they're getting the best treatment that will shorten the period and also ensure non-recurrence of ailments. So we're also working with employers to meet their staff and discuss with them matters of health, how you can keep healthy, and also how you can prevent especially non-communicable diseases, because these end up costing them a lot of money and also contribute to some of the losses that insurance companies endure.
Yes, so it's a great approach. I think that you've identified the areas that are trouble causing and tried to hone down on them. So thank you for that insight. Now let's talk a little bit about the fact that CIC has been around for about 50 years now. You marked that milestone, I believe, in March this year. So how has the trajectory been? 5 whole decades.
Now, Kenya has always been strong with the cooperative movement. During the early days of the 20s and 30s, you can hear Ford stories by our grandfathers of cooperatives, the cooperative movement. Now, around about the late 60s, the cooperative movement was insuring some of their assets with, obviously, underwriters across the country. And a lot of them were getting shortchanged in terms of premium charges, as well as some of their claims being declined without justifications or acceptable justifications. So our forefathers in the cooperative movement came up with the idea of setting up an advisory service to the various cooperatives, whether it's agri-based cooperatives, market cooperatives, or even SACCOs for that matter. So we started off as an advisory, in an advisory role for the cooperative movement players in ensuring that A, they understood insurance and therefore were not taken advantage of. 2, they would get advice on what else to insure so that they are not exposed from a risk mitigation point of view. And then the idea then evolved to, hang on, we are advising the cooperative movement. We are offering them agency services on where to take what covers. What if we set up our own insurance company? And this idea actually gained momentum, and in 1978 the Cooperative Insurance Services, which was actually a progression from the agency, was set up. Initially, obviously, to insure the insurance needs of the cooperative movement. Obviously, challenges of transforming from an insurance advisory, then agency, into an underwriter came up, because all of a sudden you now need a system for underwriting, you need reinsurance, you need actuarial services, and so on and so forth. So it wasn't easy initially, but the cooperative movement greatest strength is working together, and by working together they were able to raise the requisite funds to ensure that these additional competencies that were now necessary were obtained. And not surprisingly, the insurance company then grew as the cooperative movement itself grew. And in 2011, one of the trends that was gaining momentum worldwide was the separation of long-term insurance, that's life, and short-term insurance, that's general insurance. So as up till then, the CIC was offering both services under the same legal entity. So we demerged, and this was also a good footing into preparation for listing on the Securities Exchange which we did in 2012. At that time, we also formed an asset management business because our customers were not only at that stage asking for insurance services, there was a growing need for investment advice as well as investment advice and investment solutions. So we started an asset management business. At that time, we were not offering medical business as well, so we started also offering medical insurance services. And this has evolved to a scenario where, although there are not many insurance companies currently making money from their medical business, we are one of the few that are doing that. It wasn't always that way, and we have had to make the tough decision of saying no to some attractive schemes if the pricing of the premium did not make sense. We have also seen our asset management business grow from a young business to currently being the market leader in unit trust business. We currently enjoy a 34% market share in unit trust business. This would not have been possible, obviously, without the support of the cooperative movement, who are our biggest clients, but also individual Kenyans. We enjoy a position where we can genuinely say we are a common man's company, both in ownership as well as in patronage.
Okay, so quite a trajectory there from the way it started to where you are today. But talking about today, you know, I think a lot of people talk about insurance penetration being low, hard to get markets such as you know, the informal sector and the youth. So within those challenges that still face the industry, how are you setting yourself apart so that you can overcome them?
All right. We have focused in recent years, actually more than the last 5 years, in the microinsurance space. You probably know, for example, that we are the leading livestock and crop insurers, obviously because of our linkages with cooperatives. Farmers for a while were not able to get access to financial services, loans or credit for that matter, because the assets they had on their personal balance sheet, let's say it's their dairy cow, would not have been readily acceptable as collateral in a financial services institution. But we've worked with MFIs and so on, and SACCOs, where we insure the cow, for example, against accidental death or disease and so on. And by doing that, the cow is now available as collateral to these financial institutions, and the farmer can therefore access credit to further their aspirations, whether they are business or not. So because of our history of working with the common man, and because of our relationship with cooperatives, for example, we find ourselves at a better place to work with the common man on the streets. So one of the things that is not captured in the measure of penetration is the informal insurance. Traditionally, people come together when one of us is faced with a challenge, whether it's an ailment in the family, and so on. So if there was a way we would capture that informal insurance, because technically that's what it is, whether it's funeral contributions when someone has a death in the family, I strongly believe that the 3.1 penetration would be higher. The other reason penetration is low is lack of knowledge. Insurance is not the first thing that comes to mind to most Kenyans. And I've seen some of our peers do this. We are doing it as well. The IRA is also doing it in a big way, where we are going around the country deliberately trying to increase insurance knowledge. I see this as one of the requisites in ensuring that, or in getting the penetration to
So more educational
improve, yeah.
approach.
Yes, yeah.
Okay, and even as we wrap up, with talk of another little bit of a sector that needs more attention when it comes to insurance, that is boda-bodas and motorbikes, and of course through the budget reading this year, the talk about them requiring insurance. How have you taken that on, and are there certain products that you've geared specifically towards that?
This is actually an interesting question in the sense that it's one of the areas we are seriously looking at. Not just for Kenya, we are in the region, as you know, and there's a lot of similarities. Take Uganda, for example. I even think they have more boda-bodas than we do. Or if they don't, theirs are more unruly than ours. So we cannot ignore the fact that there is risk exposure to the passengers of these boda-bodas. And these passengers include even ladies going to the marketplace, someone late for a meeting, or kids going to school or coming from school late. So we cannot ignore that, and it's here to stay. I think no one out there has doubt that our boda-bodas are part and parcel of our economic fabric now. So the area we are looking at is to start off with, say, personal accident. If you are on a boda-boda as a passenger and you have a mishap and you're injured, a personal accident cover that is attached to the motorbike will obviously help you offset any medical bills that come along.
True.
But even the passenger themselves. So to date, most of the insurance around boda-bodas has been on the equipment itself, especially where it has been financed.
Yes.
But that still doesn't address the issue of the risk that the passenger and the rider themselves face. So that's an area we are looking at. Some of the challenges, and I'm sure some of my peers have the same challenge, is data. So we are trying to work with NTSA, first of all, to identify just how many boda-bodas are out there. And we've also realized that they have very organized groupings. They have associations, and we are working with them to see how we can, at a collective level, bring in an insurance product. So watch this space.
We definitely will. Thank you so much for all of your information, of course, so much knowledge, and for speaking to us on the Trading Bell.
Thank you. It's my pleasure.
Right. On that note, let's take a look at the markets. Time to get right into the markets on this week's Trading Bell, and joining me for the first time is an analyst from EFG Hermes, and that is Mwathi Kilonzo. He's made time for us today, so thank you so much for joining us.
Hi, thank you very much. It's nice to be here.
All right, so just before we get right into it, of course, EFG Hermes, we want you to tell us a little bit about that, and you have of course worked in London, the US, all over, so what do you have to tell us?
So EFG Hermes is a full-service investment bank. Started in the Middle East 30 years ago, and over time has grown into other parts of the Middle East. 3 years ago, took the decision to diversify and go into frontier markets. And Kenya is one of our key frontier markets. So we do a variety of things. We have asset management, sales and trading functions. The Kenya office in particular was opened in 2017 and is a fully licensed stockbroker. And since then we've grown. I mean, in the month of June, we had almost 25% market share, making us the top broker. And for the year, we're a top 3 broker. So I think that's something that we're definitely pushing.
All right, amazing. So thank you once again for joining us, giving us a little bit of background right there. Right, let's get into the numbers. And of course, you're the numbers guys. Movers this week, still seeing a lot of banks as we have been, from Stanbic to KCB and more. Of course, Safaricom is always on our movers list. But do you see any shift anytime soon when it comes to the banks dominating this?
No, I don't see any shift. And I think that going forward, you're basically going to see liquidity drifting towards 4 names. So it would be equity, KCB, Safaricom. And you know, once in a time you might get BAT, you might get EABL. And this is a function of risk aversion in the market. People want to be in liquid, safe names, call it the blue chips. And internationally as well, that dynamic is there. Locally, what we've seen is that local fund managers are buying fixed income. And the trustees of a lot of pension funds are also quite risk averse. So in that context, it's no surprise that you see that the banks are where the volume is, and Safaricom, of course, and once in a while, breweries or BAT.
Okay. When it comes to our losers, of course, something that stood out to you were telling me is Umeme. And it's gone down by just about 8% or so compared to last week. So what do you think always keeps it there?
Look, I think Umeme is a very interesting stock. It's the only dual-listed Kenya and Uganda name on the Nairobi Securities Exchange. And Umeme is also a story where there is a potential catalyst in the future, and that is the renewal of the concession. So Umeme is a power distributor, a bit like our KPLC, just a Ugandan one. And the government of Uganda is due to renew or cancel or amend that concession. So we think that Umeme is definitely going to get that concession, but who knows? And if it does get it, I think there is definitely a nice story there.
Okay, when it comes to the index, of course, the NSE 20 share index, we did not see a dip this week around. We saw a little bit of a gain, just above 1% or so. How do you think we're faring on that front?
Look, I think volumes on the whole have been quite low. So, I mean, the market has, as we've seen previously, you know, historically, if you back test it, you can see there's a strong calendar effect. So, as you go into, call it the European summer months, and even the holiday month here of August, things do start to slow down. So I think that's going to be fairly inevitable. I think as people get back to their desks in September, you see some reassessment. And I think also if EM markets on the whole become a lot more positive, then you get inflows into frontier markets, and eventually that impacts Kenya. So, you know, I think we'll tread water, and September probably see an uptick.
Okay, and of course we're talking about the futures now, the derivatives market launched here in Kenya. How do you see international investors, you know, sort of feeling towards that thus far? What have you seen?
Look, I think any initiative to grow the market and add complexity to the market is good. So I think the NSE should be congratulated for seeing through that. And ultimately, as investors get educated, as the infrastructure works, as the, you know, all the little bits that have to come together for a good derivatives market do, and information comes out, and I think it'd be very exciting. And it also allows investors, both foreign and local, to be able to hedge themselves and to take maybe speculative bets. So I think that's good. It's nice to have a different product.
Absolutely. All right. Well, on that note, let's take a look at Markets 101. Well, let's get down to some of your questions, of course, that you can send in via social media as well. And today on Twitter, Annette is asking, well, if I'm a local trader, can I also be trading on international markets? So I'm going to let you take that for Annette.
Sure. Thank you, Annette, for your question. Yes, it's possible. It's not extremely easy all the time, but I think there's a simple solution. So if you just go on your computer and if you look up EFG Hermes and you send us an email, we have a platform where we can actually help you invest internationally. And I think that's a platform that we use for a lot of retail investors in Egypt and the Middle East. So that's one way. I mean, there are other ways of doing it, but at least we can provide you a trusted way of doing it. So hope to hear from you.
All right, thank you for answering that. But also, you know, when it comes to here, you have to have your CDS account and things like that. So for instance, if you want to trade in London, for example, would there be something similar you'd have to set up there?
So what we would do, for example, so you're right, custody is the biggest issue. So who holds your assets and do you trust them to do that? So what we do, for example, I was talking about EFG Hermes in particular, what we have is a structure where we hold those assets for our clients. Okay. So the client will give us an instruction, I want to buy X amount of BP in London or Apple in New York. And we will execute that trade. And they are the beneficial owners, but they don't have to go through the hassle of currencies, of custody, of fees, and all sorts of things. It's a one-stop shop. Okay. So we can do that for people.
Very interesting. All right, on that note, let's take a look at the NSE historical fact. right, that brings us to the end of another episode of the Trading Bell. But thank you so much, Mali, for joining us, for answering our questions, and for giving us your insight.
Thank you very much.
All right, on that note, of course, I do want to remind you that you can follow us on our social media handles appearing on your screen. Keep up with the Trading Bell. Remember, if you have a question, we could be answering it in our next episode. So do send those over as well. For now, I'm Maalika Kazia, wishing you a lovely day.